If I had to start again as a trader with all the knowledge that I've built up since 2012, all the sleepless nights, all the wins, and all the mistakes, I probably wouldn't start again how you think. I wouldn't be rushing into Forex because it's sexy. I definitely wouldn't be chasing the fancy cars like I did. I probably wouldn't even start with the same strategy that I did back then. If I had to start from scratch with no contacts, no capital, no qualification, then I'm going to show you exactly step by step how I would start again if I press that reset button. When I started, I made the same mistakes that everybody does. I thought trading was about making money. That's completely wrong. It's actually the reverse. It's about not losing money. If you're starting again before you open a chart, you've got to understand that firstly, you're not special. The market doesn't care about you, doesn't care about your emotions, doesn't care about which side of the bed you woke up on the day. It's going to destroy you if you're not prepared. Step 2 is about building your discipline. Remember, it's not about getting up, being excited about trading and placing that trade. It's about rising to habits. Keep habits going every single day. Those guys in the gym have got a six-pack because it's consistent and they go every single day. It's the same for you as a trader. Make sure that what you're willing to do, you repeat day after day, hour after hour. For example, when I started, I traded everything. Every single pair that I could see, anything mentioned in the news. I traded different strategies, 5 minutes, 15, 1 hour, 4 hour daily. I didn't want to miss an opportunity. I was trading too many strategies, too many pairs, and overall trying to review too many economies. If I had to start again, I would choose 1 to 2 pairs, 1 trading strategy, and stick to my risk management trading of 0.5% risk per trade. And I think, to be quite clear, at the start, the goal shouldn't be to become a trader. It should be to be able to apply what you say consistently. And overall, it's just about following those rules day in, day out. Let's move on. Let's talk about capital, education, and setup. When I started, there was not the options available today. I tried to learn everything myself, whether that be on YouTube, different courses, forums. I was looking for that holy grail all the time. I had no structure, no accountability, and overall trading was just absolutely chaos. And some things have changed since then. If I was to start today, I would be able to skip years of that learning curve. So if you're literally looking at this and it's your first day of trading, congrats, you're literally skipping years of mistakes with this information. I would become formally qualified in trading. This avoids all the chaos, all the mistakes, all of the hours of YouTube watching, and all of the unaccredited courses that I was sitting. And I think maybe all those mistakes actually led me to making this program. It's called the Get Qualified program. You basically gain a off-qual regulated level 5 diploma in applied financial trading. This is off-qual regulated. It's not an unaccredited course. It takes time, and overall you learn so much from it. And I think maybe out of frustration over the years of going through all of these mistakes when I started, I wanted to correct that and be able to shortcut this for individuals. It's basically a course that you can complete within 12 weeks, or you can take the entire year to do it. And overall, with that, you then have the theory to be able to apply yourself in the markets. But I wanted to take it one step further because I feel like when you leave university with so much debt and not really sure what you want to do. So that's when we brought into account the funded accounts, where you can now get qualified, do all of your theory through your off-qual regulated diploma, and at the same time have practical experience with a 100k funded account on an 80-20 profit share. This is nuts because overall you're getting the theory and the practical side, but whilst you're doing that, you also have an 80-20 profit share, meaning that let's assume that over a 12-month period you can make 6%. So that's 0.5% a month. That means over the 12 months you literally have paid for your entire qualification, all of that education, and you're now qualified as a trader. That is such a rare thing, and I think maybe universities should be looking at that a lot more, but it's something that we offer at Samuel & Co Trading. And I suppose, why would I do that? First of all, when I got into trading, I spent thousands of pounds on unaccredited courses, so I didn't know where to start. But secondly, having both the theory and the practical that's off-qual regulated really makes you stand out to an employer. When someone's looking through the CV, they understand that this is a recognized qualification. And overall, you shouldn't be aiming here to sit at home and just trade all day, day trading, and that's your life. You should be looking at, how can I actually get qualified in this industry, move into a job with a recognized qualification, while still being able to trade this funded account when you've completed your qualification. If I made just 6% on my funded account over the entire year, not a month, not a week, the entire year, that would cover the cost of the program entirely. That means I gain a recognized trading qualification, I acquire a $100,000 account, I build a track record, I avoid personal financial risk, and by making 6% over an entire year, the whole thing becomes cost-free. Let's put that into perspective. Students go to university, rack up thousands and thousands of pounds in debt, sometimes between 40 and 60,000 pounds, sit there only getting theory knowledge whilst they're at university, leave that after 3 years, and then try to go out into the workplace and get a job and hope that someone gives them a chance. Completely different. You can do it within 3 months to 12 months. You have the practical knowledge of actually trading the account, as well as the theory knowledge. And as well, the most important part about this is leaving without any debt. So let's talk about trading strategy. If I was to start again, what trading strategy would I use? When I initially started, I was absolutely absorbed in trading the 5-minute time frame. It was quick, it was erratic, it was exciting. And that's what I thought that I wanted from trading, but I couldn't have been more wrong. If I was to start again today, I would choose one currency, and that would be the pound against the US dollar. Why? Because I'm a UK citizen and I understand the UK economy. It means that I've only got to really understand the UK economy and also the US economy. I need to be able to review both macro and micro data points of those economies to understand where I sit fundamentally. This means that I'm not sitting there looking at 12, 15, 20 different currencies or commodities to really understand where I sit from a fundamental perspective. It means that I've only got to understand those 2 core economies. One of the other benefits of trading pound against the US dollar, it's very liquid, meaning that the spreads are tight, which does factor into your profitability long term. I'd also be focusing on the 1 hour time frame. It's not erratic, it moves, it's predictable, and it aligns well with fundamentals. It's slow enough to avoid emotional sabotage, but it's quick enough to be able to compound your gains. This strategy that we use is called the backbone strategy. It's 1 hour swing trading. We have lots of different factors that you can take into account when you align these trades. But overall, it comes down to making sure that you're on a large enough time scale where you're not emotionally involved and you're not focusing on that one candle, but also so that you can achieve 2-to-1s, 3-to-1 reward to risks, and have time away from the charts. Something that people need to realize is day trading is not about sitting there all day. It's about maximizing and utilizing your time wisely. The direction of trend. So 1, we're looking at the direction. Direction of trend, that's what we want to look at. 2, we want to make sure that the economics. So what do I mean by economics? I want to make sure that interest rates are increasing or decreasing to see where we're going to see currency weakness against each one. For example, at the moment, the pound is reducing its interest rate a lot quicker than the US dollar. Therefore, we'd see a little bit more pound weakness against the US dollar, especially if they anticipate keeping the rates the same within the US. So once I've then had my economics align and I've looked at sort of CPI, RPI and that side of things, I'm then going to be looking for a pullback. So I'm going to be looking for a pullback. Usually this is coming off of a previous high. So for example, something along these lines. So I'm looking for continuation and support around this area. And then what I'm doing is I'm looking to target the previous high. So that's a bit where my TP, target take profit, will be. And then my stop loss is usually half that distance. So I'm literally looking for a 2-to-1 reward to risk with my stop loss down here. So assume I'm risking $100 and my take profit is then going to be a minimum of $200. I'm risking literally between 0.5% to 1%. So whatever it is that you choose, make sure you stick with it. And obviously I'm going to be looking to make double that. And then all I'm going to do is simply walk away. What I mean by simply walking away, I'm not going to screen watch. I've already made sure that I'm looking at the data points within the economy. I'm making sure that non-farm payrolls, all of that side of things is already ticked. I've already factored that in. And overall, once you've looked at these different economic points, you would understand these within the Get Qualified course because it's super important and it breaks down how all of these work. Great. If you aren't on that, then you can obviously have a look at typing them in ChatGPT. What does this mean for the economy, and try to understand that way as well. But so overall, what you're trying to do is align the fundamentals with the long-term outlook of the currency pair. If you can do that and you have both fundamentals and technicals in line, then you've got the trend moving and you can move down to the simple technical analysis of utilizing the 1 hour time frame. These are starter points, so do bear with me. I'm trying to get through them as quick as I can. Let's talk about section 4, the real secret. Here's what nobody tells you. If I was to start again, I wouldn't be chasing the perfect strategy. I would be chasing data. I want to be journaling every single one of my trades, learning about, did I rush that trade? Did it align with fundamentals and technicals? Did I use good risk management? Was my stop loss too tight? Did I go into too many trades on that? Did I lose and then re-enter? All of these sorts of data points I want to be analyzing. The one thing that you can really analyze is not only the economy and the charts, it's yourself. And if you can't stay consistent off of those data points, you're going to be on a back foot already with your trading. Every losing trade is a lesson, and every winning trade is also a lesson. What did I do right? What did I do wrong? And what can I take away from this? So if I was to begin again right now, what would I do differently? I would ignore social media flexes. I would learn one setup until I was bored out of my mind. I would protect capital like it's oxygen. I would sit the Get Qualified program with a 100K account, knowing that if I'm good at this, I'm not going to be in debt within 12 months. I would journal obsessively, analyzing my wins and my losses to look for lessons. And I would commit to a process, not chase an outcome of being profitable. And most importantly, I would focus on getting qualified. Trading didn't change my life because I was gifted. Trading changed my life because eventually I got bored and I just focused on doing the same thing day in, day out, repetitive. And believe it or not, boring is profitable. So if you're starting out in trading, let this be a lesson for you. If you've blown a few accounts and you was thinking of trading, let this be the reset button for you. Trading success isn't about being smart. Trading is about being repetitive day in, day out, so that your edge in the market eventually plays out in your favor. And most importantly, if you want to take the right route, skip all of those years of mistakes, then click the link in the description, get qualified, get funded, and overall understand the markets inside and out from an off-qual regulated qualification course. I'll see you in the next video, guys. Make sure we hit like and subscribe, and overall I wish you a fantastic start to 2026.